Hello everyone. In today's video, I want to talk about Lululemon. Is this one of the best Canadian companies to watch right now? Given that Lululemon has dropped massively from all-time highs and given that Lululemon has presented a new 5-year plan. So in today's video, I want to talk about, is there opportunity in Lululemon? In my opinion, is it a buy right now? We're going to math it up as well with some napkin math, basic calculations that I think are going to be so helpful if you want to learn how to evaluate companies. And of course, talk about the risks with Lululemon. Hey everyone, we are in a super tough market, and I thought that today's video, I want to share my process of mathing it up, like figuring out how to evaluate company, because I think that if you know how to do this, this is the ultimate key when it comes to investing. This is a huge skill set to have to make your own financial decisions, to invest with confidence in the stock market. So if you are an aspiring investor or already an investor and just want to learn more ways to make multiple streams of income to build your wealth and ultimately design your best life, then you definitely want to hit that subscribe button and that bell notification button so you get the latest and greatest videos coming to you every single week. Plus, it's free. Now, before we math it up, I want to go over the key highlights of Lululemon's new 5-year plan, which was presented in April, called Analyst Day. Now I want to go over the highlights of the presentation, and then I'll highlight, of course, some of the things that I'm not so sure about, and then we're going to math it up. Now, if you ever want to find any of this information, all you need to head to is go to Aritzia Investor Relations, and you can download this Analyst Day presentation. So 3 years ago, Lululemon presented this 5-year plan where they were going to double their men's revenue, double their digital revenue, meaning online revenue, and quadruple their international expansion. And that was just 3 years ago. Now, because of what happened, 2 years ago with the pandemic, well, everything got accelerated and they checked off every one of those where they delivered their goals ahead of schedule. And looking back at Lululemon's history of growing their stores and growing their revenue, they have a great track record of executing. So this is why I'm so excited that they're presenting their new 5-year plan, which is to double their business in 5 years with a projected revenue of $12.5 billion over the next 5 years, which is essentially doubling their men's growth, doubling their online growth, and quadrupling their international expansion again over the next 5 years. Now, some of their big bets is like making an acquisition in Mirror, which is like basically having your own personal gym through a Mirror where you have access to a personal trainer, you have access to classes, and if you can have a very successful subscription model, well, that type of revenue is really sticky. But this is still a very minor bet for Lululemon, but if it is successful, it could obviously be a huge catalyst in their 5-year plan. And I could say that looking at their 5-year plan, that type of bet is not included in their revenue. Now, one thing I really want to key on is looking at the total addressable market, which is $650 billion in the athletic wear. They said they're only addressing 1% of the total addressable market, which is like, wow, I can't believe that that market is so big. And another thing I really like is that they've gained more market share than any brand in the industry since 2019, which is why they're really focusing on quadrupling their expansion, specifically focusing in China over the next upcoming years. I know personally, whenever I go to a Lululemon store, it is very busy, and I'm always amazed at the new product lines, the new footwear, the new different types of gear, like for casual business gear, gear for tennis, different clothing lines for just going out. I love it because as a person that loves the soft feel and function, comfortability, I mean, Lululemon has that like nailed, okay? And I see more and more men just shopping at Lululemon. Now, the company's fundamentals are amazingly strong. I mean, I've been harping about this for last 2 years. Lululemon has amazing cash flow, zero debt. Their revenue's been growing at a compound annual growth rate in double digits for the last 10 years. Their earnings have been growing double digits in the past 10 years. And their profit margins have also been improving over time because of their digital revenue, which means less overhead, more money coming into the pocket. Although there's been a lot of promising things from the analyst day presentations, which is always to sell Lululemon in its best light, we really got to talk about reality, which are the risks with this company, because every investment always involves risk. So the risks I see, and as per the analyst day presentation, which I 100% agree, is the supply chain disruptions. This could be ongoing for a while, so revenue could be a little bit lumpy if we get this ongoing supply chain disruption where a lot of the materials are, well, from China. Second one is inflationary pressures. Now, what that means is that the cost of their goods could go up, meaning the cost of materials, the cost of shipping could go up, which could start eating away at their profit margin. Third one is, well, potential ongoing breakouts in the year or two, which could, well, cause supply chain disruption, economies shutting down. I really hope that we're way past that, but it's a risk in itself. The last one is the geopolitical landscape. Now, I know that this one is more about sanctions ongoing between China, United States, and Canada. I think of it as more, it's unpredictable in China. We've seen what happened to Alibaba. We've seen what happened to Tesla. Well, because of the COVID, well, they could shut down parts of China. So with Lululemon, China is always unpredictable. And if China is going to continue on with the 0% policy for COVID, well, they're going to really hurt their own economy, which could cause potentially a recession in that country, which then means if there's recession in China or a slowing economy, people don't spend as much. And that could hurt Lululemon's revenue growth over the upcoming next 5 years, considering that they're really looking to quadruple their international sales if they're really hyper-focused on expanding in China. So these are the risks I see, and I see like China is probably the number one risk to Lululemon. And I don't know if Lululemon is going to be super popular in China. It's not like I could get intel on it. It's not like I'm living in China. It's not like I could just check Google Trends and see if the store sales and Lululemon and traffic to Lululemon is increasing in China. So that's something that unfortunately I can't really get a hedge, or I can't really tell. Now let's math it up. Now I'm going to use the market cap valuation by Peter Lynch, which is a very easy peasy way of just checking, can the market cap double in the next 5 years, which would give you a return on investment of 15% year over year. And then I want to check the bull case versus the bear case. Now, I'm showing you this because I really think this is going to be super helpful to you, because then you can run the numbers for yourself. So looking at the bull case, if we were to double their market cap and then use the revenue growth, which is like 12.5 billion 5 years from now, and then we use a profit margin that's slightly better than what they have today, which is 16%, because I think it's around 15.5% in the last quarter, then their future PE over the next 5 years would have to be a 35 for them to double their market cap. Now, this may seem reasonable because they're growing at double digits, and if you looked at the past PE in history, Lululemon rarely traded at a PE of 35. But one thing that gets me, because this is a bull case, is that I don't know after 5 years, will Lululemon continue to grow double digits? And if it doesn't, and this is the wariness of investing growth stocks, is that if they don't, then their future PE can compress, as we've seen what's happening in the stock market right now. So the moment a company slows down, their PE starts shrinking. Now let's do a bear case. If Lululemon doesn't grow 2x their revenue over the next 5 years, and they grow in the lower double digits, say 13%, 12%, which they actually haven't done like over the past 10 years. There's only been a couple periods where they've grown that slowly. Now, if they did that, then there's no way they could double their market cap over the next 5 years. So I would say that in a bear case, obviously with Lululemon's valuation right now, there's definitely room for growth, but the return on investment that you'd expect in a bear case might not be worth the investment. I'm actually waiting for Lululemon to drop even more. I'm a conservative bull, I would say. So for me, I'm always been more cautious. I always look at what is the art of possibility. And I would really personally waiting for Lululemon to drop even more, which is possible over the next couple months. And if so, I'm going to nibble up more positions, but I'm definitely not going to go all in because for me, I'm wary of the expansion in China. I really hope that they are successful, but because I have no intel on the landscape in China, on the shopping behavior and how popular Lululemon is in China, that's where I'm like a little bit more cautious. But if they can prove 1 year later that they're executing really well in China, well, then there's plenty of opportunity to get back in when the risks are less. Anyways, I hope you found this video super helpful. I hope that you really enjoyed the process of going over the napkin valuation. I would say for you, I've given you the formula. This is a formula used by Peter Lynch. You can change the PE ratio. You could change what you think the revenue is going to look like. You could change the profit margins and just see what is the bear case and the bull case for yourself. By doing this, it's going to give you a huge advantage for determining what you think the company could do over the next 5 years. This is really, really helpful, especially if you're looking at growth stocks. Anyways, I'll see you in the next video. Bye.